What's up, investors? It's the Russian dude. Let's immediately talk about this, I would call it a scandal within Tesla's shareholders. Basically, what's about to happen is that Elon Musk, its CEO, threatens to quit Tesla if he is not approved his $56 billion payment package, which was a long time agreed by the shareholders. The voting whether Elon Musk is supposed to receive this enormous amount of money or not is set to happen this Thursday, June 13th, and basically, according to some board of directors, it is not about the money. And I'm here not to criticize Elon Musk, whether he is a good Tesla CEO executive or not, but apparently you already know that Elon Musk kind of disperses his attention across other companies. At this point it even feels like equally. One week he's all about Tesla, another week he's all about X, X Twitter obviously, another week he's all about Starlink, and then suddenly he's about his SpaceX. So it's not like that Elon Musk has his undivided attention on Tesla, his flagship company, which basically made him famous and rich. And a lot of people also assume that potentially the reason why he threatens to leave Tesla, whether this money is not approved to him, it is because he might need actually this money to help maintain all these companies he's doing about, once again, X, SpaceX, Twitter, Tesla, and so on. Elon Musk is already one of the richest men on earth. He used to be the richest man on earth. So yes, I honestly do not think that he just simply wants $56 billion. It's not like that any of us would say no to this amount, but I do not think it is personally about money for him. But nevertheless, the biggest Tesla investors, such as for example the Norwegian Investment Fund, which is the 8th biggest investor in Tesla, they are categorically voting against this package. They think that this $56 billion will serve better if they are retained within the company itself, so that this money can be used by Tesla, not by Elon Musk and his unexplainable and sometimes crazy endeavors. Another ex-executive of Tesla, Peter Rollison, who right now, by the way, is the CEO of Lucid Motors, another electric vehicles company which is specializing primarily in business class of vehicles. Think about it as more high-quality Teslas. Basically, he used to be responsible, if I'm not mistaken, for Tesla Model S, the fastest ones. So he was a leading engineer or something like this, and eventually he quit Tesla because he had some kind of disagreements with the upper management, potentially with Elon Musk himself. And then with his expertise, with his knowledge, he took some of the Tesla ex-employees, and once again they started Lucid. So long story short, what this guy Peter Rollison is saying, that Elon Musk is losing focus and Tesla is losing its edge and competitiveness on the market of the EV vehicles, of electric vehicles. At first, yes, whenever Tesla was just gaining the popularity, they were focused on breakthrough technologies, trying to bring as many amazing features as possible and things like this. In the meantime, right now, they are focusing, as unfortunately the majority of corporations, on just extracting as much profits as possible. Because let's be honest, the updates from new Tesla model to the next one are minimal, just almost like with the Apple. Every single time they release a new iPhone, it is only about camera and processor. And because it is primarily Tesla which made Elon Musk to whoever he is right now, if Tesla might have some financial problems in the near future, which by the way its growth already is nowhere near close to what it used to be. Because of this, Elon Musk might not receive as much money out of this company for his other side projects, the same companies we've been talking about a couple of minutes ago, which basically means that everything, as you can see, is interconnected. And now, please allow me just literally a couple of minutes to talk about the stock market, because it looks like that we might have a small sign of hope for the near future, because FOMO, the fear of missing out, is now taking over the stock market. To begin with, right here you can see a very interesting graph, which shows that a lot of companies during their earnings call, fewer of them are starting to mention a recession during this earnings call, which basically means that not that many companies are now concerned that this is going to happen. It's not like that I agree 100% with this, but the data is the data. Another thing that potentially tells us that the near future for the stock market might not be as bad is that historically June was relatively good for stocks, because in May there is a so-called proverb, sell in May and go away. Well, eventually whenever May is over, people start to buy once again inside their portfolios. They start to bring back their shares that they sold literally a month ago. Not that many people do it, but anyways, the fact is the fact. For this reason, June usually, once again historically, is not that bad of a month. And next is the graph which shows the performance of cyclical companies like restaurants, auto manufacturers, retailers, and so on. Basically, as you can see, their relative performance to the S&P 500 is going down, pretty much every single one of them. And this is, I would call, a sector of the stock market, sector of the economy, which people prefer to choose when there is an uncertainty on the stock market. Whenever people don't want to risk their money. For this reason, they tend to invest in more or less safe companies, once again from these industries and sectors. But as soon as the situation stabilizes, as soon as there is some clearance, some clear sight in the near future, people once again tend to be a little bit more risky with their investments. So basically, whenever cyclical industries go down, supposedly more risky investments go up. Once again, don't take my word for it. It is only just, once again, pure data. Because of this, right now we have a so-called situation of the FOMO, the fear of missing out. Whenever people are afraid about investing on the stock market, not because the companies, the prices are going down significantly, there is blood on the street, no. But because it is actually exactly the opposite. They do see that the earnings report that companies are publishing are maybe not as good as expected, even though majority of them they still beat the low expectations set by the Wall Street. And nevertheless, the stock prices they still continue to go up. People are confused, like how is it possible? The report was not extraordinary and the share prices are going up. Well, now it is too late for me to invest because the price is already too expensive for me to invest, and this is exactly what is called the phenomena of the fear of missing out. Whenever you kind of want to invest, but you think that you are too late because the price already went up. But eventually, if the price continues to grow, your feeling of FOMO kinda fades away and then you become greedy, you end up doing even worse decisions. You buy the shares of the company you were interested in months ago at even higher prices because you think, well, it just keeps growing, like I'll just buy and it will keep growing, what's gonna happen? You already know the perfect way of the stock market, how it works. As soon as you specifically buy shares of a company, this means that the share prices will start declining in the next couple of days. I know I did it myself personally, so no surprise here. And to end this video right here, you can see the chart which shows which companies are doing their earnings reports this week, so feel free to pause the video if any of your companies are reporting. And as always, thank you so much for watching. Please subscribe to my channel and like this video if this was informative or useful or both, and see you tomorrow.